The used car market is collapsing and negative equity is getting even worse. The latest data we got from Edmunds Pops was from Q4 of 2023, and on average, Americans had over $6,000 in negative equity on their vehicle when they went to trade it in. Since then, used car prices, both wholesale and retail, have been falling even more, and retail sales of used cars have sputtered out, not nearly been as strong as the industry expected. It is a bad time to be trading in a vehicle. And quite frankly, it's a good time if you're looking to buy a used car. They are depreciating significantly again.
Yeah, unfortunately, if you have a car that you're paying on presently, the likelihood that your negative equity is greater than what the average had been, and the average had been $6,064. My guess is today, with the continuing decline in wholesale values on pre-owned cars, that negative equity has grown substantially. I would not be surprised if it were in excess of $6,500 to $7,000 on average moving forward.
We see from customers very frequently upwards of $10,000 in negative equity, and we frequently get asked the question, how do I negotiate a good car deal when I have negative equity? The best thing you can possibly do if you're that upside down on your auto loan is just pay it off and drive that vehicle into the ground. And it is especially pronounced for used electric vehicles. We have seen EV prices in the used car market, Dad, plummet, like absolutely plummet. The average transaction price for a used EV had been over $63,000 about 18 months ago. Nowadays, it's closer to $33,000. And internal combustion engine vehicles have also depreciated. They've gone down to about $32,000 from somewhere around $34,000. So we are seeing continued depreciation of used cars, which is normal, but it's more rapid than we've seen in recent times. And also, especially for EVs, it is uber significant.
Oh, absolutely. If you're an owner of an EV with any thoughts of wanting to get rid of that and you didn't pay cash for it, you are going to be so far underwater. I don't know, it might create an electrical fire.
The latest data from Black Book shows that the wholesale markets, we actually just experienced our largest 1 week decline in used car values at the wholesale auction since January. So it seems like that we could be at the beginning of more severe depreciation. And this is coming off the heels of a less than stellar tax time. Cox Automotive has put out data that really makes it clear. The headline is used vehicle inventory increases month over month after unremarkable spring bounce. So this is the time of year where used car prices start to depreciate again. If I'm not mistaken, you and I had made videos in the past that said wait to buy a used car until after Memorial Day. And look where we are, folks. It's after Memorial Day. We're in June, and we are seeing increased depreciation of used cars, which is going to create an opportunity for people if they're interested in buying a used car.
We absolutely anticipated this, and it seems to be happening. And really, there was very little spring bounce for the spring selling season, tax season for pre-owned cars. Our dear friend Brandon at Car Questions Answered has mentioned many, many times recently that the value of the used cars that he tries to buy has gone down so much that he's no longer in the $5,000 and below range. Most of the cars are well below $5,000 that he's selling. So we see that sales didn't spike the way they normally do. And now historically, we are seeing depreciation happening at a faster pace than what historically we had been seeing. So I would think we should continue to see a downward pressure on both wholesale pricing moving forward, and ultimately that will be reflected in retail pricing.
Yeah, absolutely. When you dig into the data, it tells a pretty clear story. Black Book shows that across the board, we are seeing depreciation in all cars. There's no single type of car, for example, subcompact, compact, midsize, full size, near luxury, yada, yada, yada. They are all depreciating. Very, very, very negligible increases in sporty cars and premium sporty cars, and trucks and SUVs and vans are all the same as well. That across the board, every single segment of vehicle is depreciating. What I found very interesting within the Black Book data is that the volume of used car retail listings continues to grow.
Yes.
Used cars listed for sale nationwide are up about 7% since the beginning of this year. There is more inventory for sale if you're a retail customer than we had at the beginning of the year, like 7% more, a significant amount more. That means dealer carrying costs. That means discounts so that they can transact that inventory and go buy new cars. There's immense pressure, especially when you factor in during the pandemic, a used car dealer could say, you know what, I don't want to sell to you retail customer. I'll just take it to the auction and make more money there. Not today. Not today. We know wholesale prices are falling. So this is a little bit of a, I think, buyer's market signal for used cars after we had cautioned folks, not a buyer's market for used cars, buyer's market for new cars, but not for used cars. No, we're getting into buyer's market for used cars.
We are starting to move in that direction. When used car inventories increase, wholesale values continue to decrease. Ultimately, you're going to see retail values, asking prices going down. People are going to be burdened with negative equity. It's going to be harder and harder for used car dealers to find people to buy their used cars, which should help to lower used car retail prices.
One other factor in all this is the reality that new car prices are down significantly. So you now have downward pressure on used cars as a result of bigger incentives on new cars. We've seen, for example, some of those Stellantis vehicles out there, $15,000, $20,000 off. Why would I buy a used one when I could just buy a new one for pretty much the same exact price? That's really going to influence used car values as well. And I need to do a quick plug, caredge.com/sell. If you are in a position where you do need to trade in a vehicle or sell a vehicle, get multiple quotes, multiple offers. There is no reason to just take the KBB value and say, okay, that's what it is. Like, you can negotiate the vehicle you're selling. You can negotiate your trade in, even though it's kind of not a seller's market. You should take advantage of the fact that you should get multiple offers all in one place. But Dad, new car prices are going to drive down used car prices at least a little bit, right?
Absolutely. There is always a correlation between the two because there has to be a significant enough spread between the used car asking price and the new car transaction prices. The used car asking price has to be significantly low enough to attract a customer to go in that direction as opposed to spending a little extra for new.
And interest rates, we didn't even touch on that, but just to throw it out there, new cars have subvented interest rates. If you've got qualifying credit, you might be able to get 2, 3, 4% APR versus the average interest rate right now on a used car, almost 14%. So, that's another factor in all
Yes.
this, is if the automaker is subsidizing you purchasing the vehicle, not only with a cash incentive that makes the price more comparable to a used vehicle, but also giving you a better interest rate on that. You can't really find that for a used car. Obviously, for used cars, go to your local credit union, get pre-qualified. We have tons of videos on that, but that's another factor driving used car prices down because less people are interested in them because of a 14% APR.
Every indicator is indicating that prices on used cars should be going down. Regardless of what the asking price is on a vehicle that you may see, try to negotiate a lower price. You might be surprised at what the dealer is willing to do.